Hey guys, it's Kevin DeSilva here, and today I want to say what the heck is a TIC sale? Now, this isn't a condo, this isn't a townhouse, it looks like one. Why is it so cheap? This is new construction, it's a fraction of the small lot homes over there. If you're watching this video, it might be because a beautiful home has caught your attention and the price just seems too good to be true. And after a little bit of investigation, you discover that it's a TIC sale. This is a tenants in common sale. Now, I'm sure you've probably asked these questions as you've seen these homes on the market. They're too good to be true. They're beautiful homes, but they're TIC. Tenancy in common is one of the fastest growing ownership types in California, particularly in San Francisco and Los Angeles. And if you don't know what's going on, are you missing out? Or should you just steer clear of them? So follow along today because we're going to explore how tenancy in common works, how it's different than a condo or a townhouse, how you're protected, and how you might actually be missing out on the next big thing. Hey guys, it's Kevin DeSilva here with the Living in Los Angeles channel. And today, like I said, we're going to be talking about tenancy in common individual sales. So these are fractional ownership. I'm sure you've probably seen them. They're brand new construction homes. They look like townhomes, but in the description or through your agent, you discover the 3-letter word TIC, and it stands for tenancy in common. They're sprouting up all over the place. You'll see them a lot in Silver Lake, Hollywood, West Adams, Mid-City, Larchmont, you name it. And what you're buying is fractional ownership. Let's say there are 2 units on the lot, you're buying half the ownership. 3, a third. 4, a quarter. And they can go higher, but that's typically reserved for apartment buildings that have been converted to TIC condos. And what's really appealing about them is, well, the price. I mean, these are million and multi-million dollar neighborhoods, yet these TIC townhomes or condos are a fraction of the price. Now, it's a path that people frequently overlook because it's different, and different doesn't always draw comfort. But in today's condo market, with all the balcony inspections going on and all the restrictions, this might be a property type you're overlooking, and let's take a look at why. So let's break it down. A TIC sale stands for tenancy in common. Whereas with a condo or a townhouse, you're buying ownership of 1 unit. In a TIC individual sale, you're buying ownership into the group, and your TIC agreement gives you the ownership of your unit. This is what is called fractional ownership. You own a part of the whole. Now that might sound a little abstract, so let me put it in simpler language. The TIC agreement grants you access to your space. It outlines your private areas, like your unit, your balcony, your rooftop, maybe even your yard and your parking. It also outlines your common space. Now these might be your driveway, the general front yard, the general backyard, any side yards, anything that is not yours and is shared with the other owners. And in that sense, it's very much like buying into a condo or a townhouse with an HOA. A lot of times you have shared interest, and then you have your own private interests. And the main difference here is that with a condo or a townhouse, your shared interest is maintained and you have an agreement to do so with the HOA, whereas your private interest is deeded through the county. And these two things exist separately. And whereas with a condo, you own the entirety of your condo, but you're subject to the HOA, and we've heard those whole horror stories. With fractional ownership, you actually have interest in the entire pie, which can give you more power over what's going on. And so these key differences are why they're a little bit cheaper. People look at things that are different as not being the same value. But in reality, you're still getting the same great neighborhood. You're still getting a great product, and you're getting a great home, just at a cheaper price. And as I always like to say, a lot of times you'll buy at a discount, but you might not sell at a discount. And the reality is, it's a growing segment of development here in Los Angeles. And the reason being, it's faster to construct, it's more versatile, like when you're done with it, it can be sold as an entire package or in its individual parts. And there's fewer hoops to jump through by getting your condo map and your subdivision through the state of California and local municipalities. So let's talk about what you're really getting when you buy a tenancy in common. Your deed reflects the ownership of the whole, but your TIC agreement, which is sometimes referred to as your operating agreement, will outline the fraction that you own. So for instance, if there are 4 units in the building, you will likely own about 25% of the overall property. And this TIC agreement spells out everything. It outlines your exclusive right to the unit, your shared costs with the other owners, your shared property with the other owners, how decisions are made, what happens if somebody defaults, and what happens when you want to sell. Think of it like a lightweight version of a condo community. So just like a condo community, you have mutual obligations to maintain the overall property. That includes, but is not limited to, building insurance, grounds maintenance, general building repairs, maintenance of your shared spaces, maintenance of the driveway, balcony inspections, or state mandated upgrades to the property. So this is very much just like a condo or townhouse in that respect. But let's talk about how it's different. Because with a townhome or a subdivided property, a lot of times when your neighbors default on their obligations, your main recourse is to lien their property, but that doesn't necessarily get you off the hook from making those payments. For instance, if there are 4 of you in a townhouse community and one of your neighbors stops paying their HOA dues, the 4 of you are still required to pay your building insurance. The insurance company doesn't let you off the hook. And depending on how bad that neighbor gets, your building might become unwarrantable, which means you'll have fewer lending options and will make it tougher for you to sell. TIC agreements put a little more teeth on it. When one of your co-owners decides to stop paying, you can actually foreclose on them. So this additional protection means you have more teeth and you have the ability to recover costs. Now, you could, theoretically, buy this TIC. And along with your other co-owners, as long as everybody agrees, you could explore what it would look like to turn it into a condominium. Now, keep in mind, a condominium is just owning space on land. It's a type of subdivision, but you collectively own the land and you individually own your space on it. The key difference between a TIC and a condominium is that your space that you personally own is deeded. And in the TIC, it's the agreement. But if you wanted to, you could convert to a condominium. It's a process, and we highly recommend hiring a lawyer for it because a lot of legal documents will have to be submitted with the state of California. But it is an avenue to increase your home value overnight. And keep in mind, some of the legal documents you'll have to file with the state and with local municipalities are that your building is up to par with current standards for subdivision. This might require some potential building upgrades. So it might be something to explore sooner rather than later so that upgrades don't get away from you. And it usually takes a unanimous vote amongst all the owners to move forward, since you guys are a collective. But hey, how hard is it to get everybody to put a little bit more money into the project if it means you get a lot more money out of the project? Well, that just depends on who your co-owners are. But my suggestion, plan for this as a bonus. Don't plan for it as a guaranteed exit. It is a huge perk, but you might just want to stay there for how long you're going to stay there and eventually move on. Now, here's the good news. A lot of people get turned off from TIC sales because, well, they're different and they think that financing can be very difficult. To be honest with you, when I was earlier in real estate, I had the same bias and I suffered from contempt prior to investigation, which essentially means I committed to my bias, but I didn't investigate it further. Now, there are a number of lenders out there who lend on TIC in the state of California. National Cooperative Bank and Mare West are 2 of the top lenders. But there are other credit unions and such entering the game because it is an opportunity to drive revenue for the lender, of course. And as lenders are getting more comfortable with the product, so too are the down payment and qualification requirements. Financing can be a concern for your ability to get out of your project when you go to sell your own unit. National Cooperative Bank has been in the game for 40 years. Mare West Bank has the lowest down payments. One thing to keep into consideration is their qualifications are in line with other banks. And the reality is, if a bank is willing to lend you money, they want to make sure that they get it back. So when you buy a TIC, you have less worry about who you're getting in bed with. Because if your co-owners also went through these same requirements, odds are more in the favor that they're going to make their debt obligations. And to look at that a little further, one of my lenders will do 10% down. Another has better rates at 20% down, but this is a huge change from what people think. people thought that you needed to have 25% down in order to buy your share. And the way that it used to work is you used to buy into one loan. Well, that's not the case anymore. You actually buy your own individual fractional loan. It's a loan for you against your unit. Now it's with the entire property, but it's still just for you. You don't need anybody's permission to get out of it. And what I mean by getting out of it is when you go to sell, you can just sell. And as soon as you collect the money, you pay off your loan just like you would with a normal house, a condo, or a townhouse. Now, this doesn't mean you can't do a building level loan. The rates or terms might be better, but there are some nuances to that. The main nuance is that everybody needs to buy at the same time. And everybody should have roughly the same qualifications because they are going to give you the best rate based on the qualifications of the lowest party of the group. Now, most loans these days are unit level loans, and this is your fractional loan. The fractional loan is very much just like getting a loan to buy a condo or getting a loan to buy a townhouse. It's your loan for your unit. So before you break out Google and look it up and get a wrong answer, make sure to connect with one of the lenders I just mentioned or comment TIC lender below and we'll get you connected with one that's right for you. Now, there is one real risk about transferring ownership because in the state of California, when over 50% of ownership transfers in a particular property, that can trigger a reassessment. Now, the reassessment isn't for just your unit. So if 2 of your neighbors sell at the same time, it might not trigger a reassessment. But if 3 of your neighbors all sell at the same time, it might trigger a reassessment. And what that means is value of the property will be brought up to the assessed value at the time of the sale. Now, the good news is it is still relatively a 2, 3, or 4 unit building. So you can dispute any assessment. And there are services available for that. And go ahead and comment below dispute and we can connect you with some of those. But let's give a real honest comparison of the two. Because the reality is you're watching this video to learn if it's something that can work in your life. You already know that a townhouse or condo can, but you might not be happy with the prices in the neighborhoods I just listed. Because the reality is West Adams, Silver Lake, Larchmont, these are all expensive areas. And if you're looking to break into Miracle Mile, Big Fair Village, or North Hollywood, this might be a viable option for you to not have to buy a fixer. So the most obvious comparison of them is that TICs are cheaper, and we've already explained why. The reality is condos and townhomes aren't different. So buyers feel a little more comfortable with it, and as such pay more money. And that's the main headline. Because the reality is, in some parts of the city of Los Angeles and the state of California, you might be buying a new construction TIC. And in other neighborhoods, you might be buying a TIC that was converted out of an apartment building. We're going to get into some of the nuances and due diligence you should do, but that's in the next segment. But the trade-offs are real, because just like you're considering it somewhat of a risk to buy this TIC, when you go to sell, that same risk is going to apply to your buyer pool, which means you're going to have a smaller buyer pool to pick from. Now, the reality is, if home values keep going up in the neighborhood, so too should your TIC. And as I mentioned earlier in the video, you'll feel like you bought at a discount, but that you might be selling at a discount. But after experiencing it for yourself, you should definitely let your real estate agent know what's going on and the reality of your living situation. Because it's your experience with the home that might shape your next buyer. And if they hear how great it was for you, that might ease their discomfort. And you're not necessarily exempt from risk when you buy a condo or a townhouse. Case in point, balcony inspections. This is a California state law, SB 326. Up in the Bay Area, there was an incident where there was a party at a building and a bunch of people were on a balcony. The balcony was older and unfortunately it did give way, and there were some casualties as a result. The state legislatures got together and determined that we had aging infrastructure, and so they set out on inspecting balconies. You might recall in Los Angeles after the Northridge quake, there were similar laws put into place about soft story retrofit. This is where the building collapsed on the parking below, and once again, there were casualties. Now, this is something that was preventable had there been better maintenance and upgrades to adhere to seismic building codes. But in this situation, these are upgrades to structural balconies, and they're going around everywhere. They're popping up on over 90% of the condos we're selling. Yes, that's right. Over 90% of our condo sales recently have had balcony inspection issues. So how do balcony inspection issues hurt? Well, whenever there's ongoing issues with a particular HOA, lenders don't want to lend, and that limits your lending options. And guess what? it's actually worse than TIC, because with TIC new construction, at least your lenders are willing to lend to you. When you have an unwarrantable condo, a lot of times your option is a bank statement loan. And bank statement lenders aren't necessarily lining up for this, which means you're going to take a hit on the rate. So just because condos and townhomes are more traditional doesn't mean they're not feeling it either. In fact, what I'm seeing, there's more risk in buying a condo or townhouse right now than there is in buying a new construction TIC. Now, obviously a new construction townhouse is going to be your best bet, but you're mainly going to want to look at that if you could afford it. Because the reality is your best neighborhood might be out of reach. And how well your TIC agreement is written will make the difference on whether you have trouble or not. Because when something comes up, your ability to squash it is essential. And a well-written TIC agreement makes it easier. With a condo, you can run into the same issues. Your other townhome owners might have a dispute on making repairs to the building. They would rather patch some things when you'd rather replace the roof. They don't have enough money to pay for the roof replacement, or other homeowners aren't paying their HOA dues. And like I said earlier, in an HOA where you are a condo or townhouse community, a lot of times your recourse is to lien their property. But that doesn't necessarily mean that you get to claw your money back. With a good TIC agreement, a lot of times you can foreclose on your neighbors for not meeting their obligations. And this is essential. This protects you, because the last thing you want to do is be covering the cost for your neighbors. And if you have the ability to foreclose on their house, should they miss even just one payment, then you're in a better position to not bleed that money in the long term. But let's be real, condos do win on standardization. They're more natural. You own your unit, you have a deed to your unit, and that makes you more comfortable. Because when things are going well, you do have more lending options. But if location, price are a huge importance to you, you may want to reconsider what you're buying. Because you could buy a small condo in the same neighborhood that you could buy a bigger TIC. I know we covered a lot, and we'll cover more in future videos. But before you do decide to write that offer on the TIC, let's talk about some due diligence items you should be considering in your purchase. You should be looking at your TIC agreement, otherwise known as an occupancy agreement. Read it front to back. Confirm it with a lawyer. You want to confirm your percentage of ownership. You want to confirm your voting rights. You want to confirm transfer rules, and you want to confirm how assessments work. You want to confirm how the ownership on the building will be financed, and you also want to confirm how many of the units need to sell for your purchase to go through. If you're buying a TIC resale, you're going to want to ask for the financials, just like a condo or a townhome. This is one of the most important aspects that I tell my clients to review. You want to see recent budgets, bank statements, reserve records, and any upcoming capital repairs. You'll also want to review the insurance policy. What does it cover? And as for the building itself, you're going to want to do the home inspection. It's pretty much like a normal sale. And we talk about that in my contingency video. Because how you're protected is ultimately one of the most important aspects of your home purchase. Now, if owning the TIC as a TIC is not your desired end goal, you do want to look into local guidelines for what it is to convert to a condo. You want to look at the cost and talk to a lawyer about that. When you're looking at the documents, you do want to ask about any disputes with any of the neighbors. These are usually noted in the meeting minutes, and also you want to check the maintenance records. And if you plan on holding on to this unit but still moving on, you should be checking the rental policies of the HOA and the community. But this is pretty much the same as a condo or townhouse. One benefit here is a lot of times TICs don't have the same restrictions, and newer construction ones don't come with the limitations in case you wanted a short-term rent while you were away. Just make sure to be cognizant of your neighbors. Last thing you want is a dispute over your activity. And when you sell, you do get all the same ownership rights as if you were owning a condo or townhouse. If you use it as your primary residence, you can still do your primary residence tax exemption. And if you use it as rental property, you can still 1031 exchange. Check with your CPA to verify, make sure they've done one of these before. TICs aren't for everyone, but they don't necessarily have to not be. I know it's different. And hopefully through this video, you've learned that it might not be as different as you think. But the reality is people fear something that is different. And my goal of this video was to help you get past that fear so that you're not being stopped from living out the next chapter of your dreams in the neighborhood you want with the type of home that you want. Because the reality is, owning a 4-bedroom TIC unit in a good neighborhood might be better than owning a 2-bedroom condo in that same neighborhood. And what feels like risk because it's too good to be true might actually not be as risky as you think. Go ahead and contact us if you want to see an inventory of TIC ownership in the Los Angeles area. You might see that it's a little more appealing than you think. And as always, if you love these videos and you want to be the first to learn about them before we share them with anybody, go ahead and hit that subscribe button, turn on your notifications, and that way we can keep you informed so that you can live out the next chapter of your dreams and grow your wealth through your living situation. It's Kevin DeSilva here again with the Living in Los Angeles channel. Stay tuned for the next one.